afternoon, ladies and gentlemen. Eric Coffin, HRA Advisories. It is January 17th, 2019. I'm here with Chris Taylor from Great Bear Resources, and we wanted to have a little bit of a conversation. As you may or may not be aware, Great Bear put out a fairly stupendous, I would say, drill hole yesterday, and they held a very interesting webinar today. I mean, I was happy to see that webinar because something I've been telling subscribers for 2 or 3 months now is to stop obsessing about every drill hole and focus on the big picture. But, you know, now that I've said that, do you want to obsess on the drill hole for a minute? It was quite a drill hole.
We were disappointed, Eric.
Sure.
we thought maybe we'd get 2 kilograms per ton gold, but we only got 1.6.
So you know, sucks to be you.
I will tell you a very quick story. When Bob called me just before we put the results out and listed the assay intervals to me, he said, you know, X over. He's like, you know, it's 5 over 10, and then it's you know, we had another. It was 50 over you know, just under a meter. I was like, oh, Bob, you know, well, good job, you know. And then he said, Chris, that's ounces, not grams. I was like, Bob, you are an a-hole. But he got me pretty good. Phenomenal.
Well, that's again, this is the Hinge Zone. I mean, this is, you've had, you know, I would say the holes that kind of, I guess, really lit up the stock, if you want to put it that way, last fall, that really got things going. They were from the zone as well. Where's this hole sort of fit into the picture in terms of where it is in the zone compared to those zones?
It's further down than the initial big Hinge Zone hit, so it's deeper, quite a bit deeper, and it's off to the side a little bit. So we're still figuring out the geometry of these steeply plunging high-grade zones.
And yeah, I mean, the alert that I sent out yesterday was, you know, tongue-in-cheek, called Great Bear Takes the Plunge. But do you know?
That's actually
like
just as good as Bob's joke.
Have you drilled up plunge of this intercept? Like, are there holes there?
No,
okay.
There's nothing.
So you don't know yet whether that's the better part of it, or it's something separate, or it's.
I mean, ultimately, we tried to show in the webinar.
These things move around a lot too, anyway, right? They're not that regular.
They seem to be. The plunges look to be really predictable. What I think we have is lots of them. So we showed on the webinar today that if you just look in the immediate Hinge Zone area and the 300 or so meters that we've drilled so far, we're targeting 6 different Hinge zones, basically. So we have high-grade intercepts in five or six different areas, and we anticipate the same plunge will affect everything in that area. So that means follow-up drilling. I mean, the Hinge Zone is really just one of these steeply plunging high-grade zones within the vein network that we call the South Limb Zone.
Okay.
Yeah.
And presumably, I mean, now that you've got a fairly predictable, I mean, I know you don't want to you don't want to stick your neck out too hard, but hopefully one of the big benefits of having a fairly predictable plunge is when it comes to the higher grade stuff, your hit ratio probably goes up going forward, or at least that's the hope now.
I mean, our hit ratio has been phenomenal. So, you know, that first random, or I say random, it wasn't random, but to do the first 3 drill fences across the South Limb, we hit a visible gold-bearing quartz veins in, it was 8 out of 19 holes.
Right.
It's phenomenal. And we hit gold in all of the holes now, which is really, that is a very good hit rate. So what we're finding, the results that we put out just now with the 1,600 gram per ton gold in them, we hit the zone within 14 meters of where it was predicted to be based on our model. We basically hit it bang on. Right. So I can't predict, and Bob can't predict, and nobody can predict the grade of any individual intercept, but it varies from grams to, you know, 50 ounces now. Right. So it's very predictable geometrically, it seems, but perhaps the grade, you know, it varies from very good to whatever you just described. Ridiculous. Yeah.
Okay.
Yeah.
Now, the other thing that you went into in the webinar today that I think is really, really important for people to get their head around, you had some direct comparisons between the Dixie project and the Red Lake mine, the Goldcorp mine. And you were laying out there, you know, basically scale on scale in terms of how big your system is and how much you still get to test compared to the Goldcorp mine itself. On a scale basis, arguably you've got more target than they had. Like a fair amount more, actually.
Yeah, I'm really pleased to hear you say that. And it's one of these things where you don't want to over promote your company, right? But to give you a feeling for how excited we are about the project, I mean, the D2 fold axis trend that we're drilling right now that has all these zones, the Dixie limb, the Hinge, the South limb around it, there's other D2 fold axes that run through our property. And each one of those has many kilometers of strike extent. So if you think about the aggregate...
Most of them have very little historic work. I mean,
almost
like
none.
the D2 wasn't really very well recognized before, really.
They saw the fold, but they didn't target the right areas, right? So it's more, if it's related more to the plumbing that develops around the hinges of these things or the axes of these things, you should be looking in different areas of the project. And we have, at one point today, Bob illustrated it for everybody to see on the webinar. If you follow those trends along strike, the various contacts of the different geological units, some of the ultramafic units, some of the different basalts, they're all highly prospective and they're not drilled at all. So, and there's more of these D2 trends. So, you know, going forward through this year, you know, as you know, we're sufficiently funded for lots and lots of drilling, you know, but what we'll see is a combination of that definition type drilling in the areas we know about and step outs into new targets too.
And right now, I mean, certainly by Red Lake standards, you guys are drilling fairly shallow holes, a couple hundred meters, 300 meters maybe.
Yeah.
You're in the midst as subscribers, and of course your shareholders know of a 30,000 meter drill program, fairly early in it still. I know with the funds you have on hand, I know you've got very good drill costs, so I mean, theoretically you could go to 40, 50, 60, 70 and not really have to worry about it too much.
I guess the number would probably be, we'd have with cash on hand right now, probably enough to do about 80,000 meters of drilling. And then we have another $8 million of in the money warrants. So those are priced from 20 cents to $1.75. And that would, you know, if you factor that in as well, I mean, you'd be well over 100,000, 120,000 meters of drilling that we can do with current funding.
See, and it's really important that, it's really important you recognize this. I mean, one of the biggest advantage Great Bear has, and as Chris can tell you, I wasn't that easy to sell. And the reason I wasn't was I was waiting for the combination of, you know, results plus financeability, because if anybody who knows Red Lake knows, you've got to drill and drill and drill and drill. That's just how it is with these systems. They can be incredibly rich. They've been great producers and incredibly profitable mines, but there's no shortcut. You've got to drill tens of thousands of meters, and you're in this incredibly favorable position right now, where your dilution to drill ratio is extremely good.
Yes.
You can undertake very small amounts of dilution and drill tens of thousands of meters, and for me, that's the whole ball game here.
Thanks, Eric. Yeah, it took a lot of time to get that lined up ahead of time, but having a sub $200 a meter all-in drill cost is certainly very useful as well.
Yeah.
That's because it's right off the highway just outside of town.
I mean, I just want to get across to people, this is a very impressive story. I mean, as I just said, the whole drilling to dilution, the leverage, Great Bear is able to just keep drilling and drilling and drilling. And when you look at the scale of the Dixie system, it's essentially the same size as the Red Lake mine, the Goldcorp mine. You know, that's the kind of comparison that a lot of companies would do here, there, and everywhere, and everybody would roll their eyes, usually with good reason. But, you know, keep in mind that we're dealing with essentially the same geological, lithological, structural setting, and more importantly, obviously, these guys have been hitting high-grade gold where they should be hitting high-grade gold if you've got the Red Lake model. You know, the Goldcorp mines produced over 20 million ounces. This is the kind of target scale we're looking at. It would take 1 billion meters of drilling to get to that, but I don't think anybody in the shareholder base or in management really cares about that, because I suspect long before that, it's not going to be a Great Bear project. It's going to be somebody else's. So, you know, take a look at the story, GBR Vancouver. Great story. It's clearly going to be one of this year's big successes. Thanks for listening. Thanks for watching. I'll see you again soon.